Hi, everyone. Thanks so much for joining me. My name is Kevin Corbett. I am the Senior Manager of Business Development at Vancity Community Investment Bank here in Toronto. For those of you who haven't heard of us, we are a wholly owned Schedule A bank owned by the Vancity Credit Union out in Vancouver. Vancity Credit Union represents close to 600,000 credit members who deposit their funds with Vancity to be used towards social causes and impact ventures. Since we're a little short of time, I will kind of move through some of these first slides a little quicker, but we basically are guided by 5 main principles: social environmental impact, community investment, long-term relationships with partners, long-term sustainable resilient investment outside disruption, and transparent and inclusive governance. As an impact bank, especially in real estate, we largely focus on affordable housing because that's kind of the chief concern, but we do sustainable lending, green buildings, arts and culture, cooperative housing, heritage buildings, owner-occupied, nonprofit, charitable, basically anything that's actively making the world a better place, we look to lend towards. As noted before, nonprofits, charities, foundations, social enterprises, B corporations, which we are one of, cooperatives, again, we are a financial cooperative as well, and purpose-driven businesses. We partnered with a lot of these really noble companies here, Anishinaabe Health, Toronto, Parkdale Land Trust, Trillium, to name a few, and also with larger groups such as the Canadian Network of Community Land Trusts, Cooperative Housing Federation of Canada, and the CMHC. We've worked one-on-one with a handful of community land trusts directly, including Parkdale, Circle, and Ottawa, some of which are here today. And now, basically why I'm here. Land trusts don't necessarily, or don't often fit the mold of traditional financing companies. We like to think that we've positioned ourselves as financial consultants in this space. We understand what a land trust needs in terms of large capital expenditures, access to acquisition funds, deferred maintenance repairs, housing reserves. We also know that for a land trust that is interested in growing or preserving their existing portfolio, they need to be nimble. They need to work oftentimes within the private space. If a new property comes up for sale in Kensington, that land trust needs to operate quickly. And so we have devised a number of different ways in which we can facilitate that. Obviously, the main thing is preferred terms that are, I'll just say, better than what you'd offer to a for-profit company, leaner debt service coverage, and better pricing, negligible fees at times, and then a multifaceted kind of service, meaning we do deposit keeping, business lending, real estate lines of credit, term financing. We work with the CMHC if that's the direction you're going, individual business visas as well, all with the understanding that they are catered to the needs of a land trust that is growing or maintaining their existing portfolio. We don't want you to spend more money than you have to because I know that it's hard to come by. So we look for ways to save for you, meaning don't always need to have appraisals, don't always need to have things called building condition assessments, don't always need to get environmental studies done, things that other banks will demand effectively. We're a small, nimble team that's able to say, okay, this thing's needed, this thing's not carte blanche, this is what we need in order to do the financing. So I get into some of our direct relationships, many of which have been mentioned over the past day and a half. The Parkdale Neighborhood Land Trust, which I'm sure you're all aware of. It's a grassroots community-based land trust with a focus on protecting affordable rental stock in Parkdale. We put together a facility called the Preserve and Protect Guarantee, which was launched and actually piloted through Parkdale, which allowed them to acquire some of their at-risk residential buildings and keep it within the land trust. The nuts and bolts of that is something we could talk about later. individually, but effectively, we know that for a land trust to operate quickly, we need to provide flexible financing facilities that can capitalize on opportunities as they come up. After that pilot went well, we kind of expanded our program with the Parkdale Land Trust and provided financing for them to acquire a portfolio of affordable housing, 153 preserved units over 81 properties, which were originally owned by the City of Toronto. Basically, these properties came up for sale, and Parkdale needed to move quickly, and so we were able to leverage some of their existing deposits to allow them to facilitate that sale in an easy and kind of seamless way. And then that facility that we created, that loan facility, was refinanced with CMHC funding or other government funding, which comes sometimes a little later, isn't as responsive as the private sector needs you to be. So we're able to kind of bridge that gap. We go from nearly 200 of preserved units to a smaller preservation of units. This is a recent opportunity we worked on. Ottawa Community Land Trust was looking to purchase a 6-unit building in Ottawa on Kirkwood Avenue. All units of the property are at affordable rates of less than 70% of the average market rent, and with the help of the same sort of structure, we were able to provide them with the financing to acquire the property, and then eventually our loan will hopefully remain, and it'll be paid out with government funds, and then it'll remain and be used for their next acquisition should they so want to. So it's really kind of builds one after the next in order to allow the land trust to grow if that's what they want to do, or access capital if that's what they want to do to fix up the buildings. Circle Community Land Trust is another one here in Toronto last year. Again, another portfolio owned by Toronto Community Housing, 607 units spread across 561 properties situated in central and eastern Ontario, or Toronto. This is a kind of a blanket facility over a wide-ranging group of properties across Toronto. 561 is a lot, and so it's complicated. We have a small team that works with you in order to fulfill these very individualized needs. And why I chose these 3 examples, as you see, the scale is very different. 6 units to 607. Equally as important, although different size. And we're able to provide financing across that. The other kind of arm is we're able to provide a high interest savings account. This isn't necessarily my expertise. We have somebody in Vancouver who can walk you through everything here, but we give preferred rates to not-for-profits, to charities, to land trusts, to anybody who's looking to do good with their funds. We can give preferred rates. Same with GICs, guaranteed investment certificates. Those are usually locked in. And then here are those rates. So kind of went through it really quick. So we could save some time for questions if we have a little bit. But that's long and short right there. That's my face and my number. I have business cards. Happy to chat afterwards. I think I'll just wrap it up by saying, if you have questions, either ask me now or ask me after, but take down my information, email me anytime, call me anytime. I like to talk about these things. I like to understand your individual needs, your individual problems, your individual hurdles, your buffers, anything to figure it out. And we'll work together. And no matter what stage you're at, I was talking to some fine people earlier, and they're early stage. They might be a year away from when I might provide financing. Well, let's start the conversation, and we'll start to learn how we can help you.